on in the last couple of weeks. Today we had a lot of Fed talk. Dudley, I think, was a little bit more optimistic at the end. Mean Red, Miss Mester, wants to not only hike interest rates now, but she wants to start reducing the Fed's balance sheet. So that means selling bonds. We'll see how that plays out. With regard to the macro events, we had a GDP number today with a revision higher for fourth quarter GDP. That means growth is accelerating. That is good for the stock market and good for the country. With regard, I had wrote down a couple of things I wanted to discuss in this video. One, I wanted to talk first and foremost about knowing when you're right in the market, and a couple of kind of back of the envelope methods. I have a lot of back of the envelope type of stuff that I do. It's just years of experience, and I sort of know when things are going right or when they're not. I also want to talk a little bit about some of the stocks, the BlackRock layoffs, and what I see with regard to the market and some of the stuff you ladies and gentlemen just wanted to talk about. Anyway, first and foremost, with eyeballing it, one of the little tricks I use, knowing if I'm on the right side of the market or not, is I beta weight my portfolio, meaning you go in and there's an option to beta weight it. If you're on TOS, you just go into, I think it's monitor, activity and positions, and then there's a little box you can check off with beta weight. That's also good, but more importantly, I take a look at where the market is. Like, let's say it's a big gap up or a big gap down, and then I have a general idea of where my P&L should be based on that beta weighting, right? And based on my portfolio at the time, positioning. And for example, the other day, I think it was Tuesday when we had the big gap down in SPY. Just want to take a quick look. Today is Thursday, so that was Wednesday. No, this is SPY. Yeah, when was this? On 321 was the big gap down. I looked at my portfolio, and that was the day the market had gone up, and then it went down. It kind of went down big, right? And then also on this week, actually on 327, that was the day. That was the important day, the 327. That was the gap down day, and then we spent the whole day rallying. But I looked at my P&L, and I roughly knew what it should have been. And I had been fairly decently still long in some positions. I had some shorts on too, which I talked about covering real time, particularly like that Ameritrade one. We really nailed the bottom on that, and a few others, so I don't want to get into that. But with regard to the long positions, none of them were really down, which was amazing. And it was a chunky gap down. It was like a double-digit gap down, and I was down like eensy-weensy amounts of money. So that told me that it probably was going to be short-lived, and that it wouldn't be, and that I was still on the right side of the market. Now, if the market would have gapped down and I was down the amount I should have been, or worse, I would have reevaluated. But the internals on the day really weren't that bearish. I had said that we had a double bottom, and I'm going to show this in more detail in the weekend review. That's the big show on Sunday. But we had gapped through the 322 and 324 double lows, and there was an acceptance there. So technically it was a look below and fail. The market spent the day rallying, and then kind of the rest is history. So that's kind of eyeballing it. Have an idea of what your P&L should be, how you're doing in the market. Also, another trick, and I've talked about this in past videos, if you're doing well but you're really massively outperforming the market, it feels great, but that kind of thing doesn't last, and it means that you're kind of nearing the end of your cycle. Like if you have multiple days up, let's say the market's up, but you're crushing the performance on the market, you probably want to start booking it at some point. Someone just asked if I can start showing my screen. What I think I'm going to start doing, just as a side note, is I have to look into finding some kind of screen capture program. I've been playing around with a couple, but I haven't found one that I quite like just yet. And I think the one I like is a little expensive, so it may be a little bit of an investment, but it might be worth it. And what I'm going to start doing is doing that on the weekend review, and then this midweek broadcast is going to become a mini weekend review with like sort of a follow-on. So that's where we're going, just so people know. Anyway, so yeah, if you're up a lot into in multiple days into the market's up, but you're really up, after a few of those days, you probably want to start putting in stop loss orders, trailing stops, or booking profits. That's kind of the eyeballing it. You know what you should be making with regard to the market and versus what you're actually doing. Same thing on the loss side. The other thing I wanted to talk about, BlackRock layoffs, right? They're canning all of their people, and there's a lot of firms canning their whole research teams in favor of going algorithmic. That's no surprise. You know, you've had multiple years now of underperformance by these 2 and 20 firms, and that model is now forever, in my view, broken. It will never go back to being the same. It's removed a bit of the middleman. Like when I first started trading, you had fractions, and then that became pennies, and then firms weren't really able to make that much money on that spread anymore. And commissions were dropping with technology. I think the other big innovation here is what's killing them are ETFs. That trend, I believe, is here to stay. And I think that the danger, though, I will say this, is particularly in a down market when what I always call the up markets, actualizer markets. Oh, I like their product, or I was there and their salesperson was nice and I'm going to buy their stock and it works out. When the market goes down, correlations between asset classes start moving closer and closer to one, meaning they all go down together. So if ETFs become the norm and more, when that kind of mass wholesale dumping happens, that could actually start accelerating the process still faster. What I want to look for in that is when when sort of the levered ETFs start playing with like levered Russell or really levered S&P. There are some, but it's not really kind of the commonplace. But that's just something to think about if the market really does ever start to take somewhat of a header. I also wanted to talk about Amazon. These are just some notes of some items I wanted to talk about, and I'm curious to hear what people think, if they think Amazon is really just marketplace efficiency or if it's actually a deflationary factor. I have a very definite opinion on that. I think it's a combination of both, actually. I think it's kind of like the move from fractions to decimalization, and I think they've kind of started squeezing the margins on the middleman, and that's why you have all these big box retailers getting their you-know-what's handed to them. And I don't think that trend is changing. I know there are so many people argue with who are like, oh, this retailer's doing better and that one's doing better online. Amazon is so many years ahead of all of these companies. I think the only one who could maybe ever catch them is Google at this point. And I don't think people appreciate what Bezos has built for himself at this point. They have spent years building out their chain, their customer resource management. They've built their warehouses, their technology. They are so many years ahead. I just can't see at this point. It sort of was left. It's like weeds left to overgrow. At this point, they're so overgrown. It's just like there's no getting rid of them. So I think that Amazon has now become the new Walmart. And that, like years ago, I remember I did a presentation. Actually, it was a case study. It was in one of my accounting classes, and I remember I said to my professor, I pulled my professor aside, and I said to her, I said, "Do you realize that if this number is correct, and it happened to be a Walmart accounting problem?" I said, "A quarter of the country, roughly, or more, are Sam's Club's members." And she said to me, she's like, "Wow, no one's ever brought that to my attention," and that was the case. Now, I think that people who are, Costco has their loyal membership. I think that's a bit of a different breed. I don't know how affected Costco will be by Amazon, although I'm sure at the margins it is. But Amazon is, in my view, the new Walmart. And I think it's even more powerful because they can do kind of anything. I mean, you could pretty much buy anything at this point on Amazon. And it's like instant gratification. I know sometimes even if I'm in a bar sometimes, I'm like, oh crap, I forgot to get this vitamin, or I forgot to order this or that. And I order it, and I gave that example of the shoes that I bought. I was looking for a pair of boots a couple of years ago. I tried them on, and they were $20 more expensive in the local retailer. And before I left, I had them ordered on Amazon. So Prime seems to be the new big thing. This whole economy. This also, by the way, extends into a Netflix. They're becoming kind of the new like big movie studios, and I fully expect the move, from people spending, like if you go out, let's say on a date to a movie, it's $50 basically between the tickets and the junk popcorn, and that's not even if you get crazy with soda and candy. It could even be more. And then you're still dealing with people's cell phones and kids crying and having to go to the theater and transportation, and 65-inch televisions now are $1,500 maybe. I have a movie theater right here in my apartment, so nobody really needs to go anymore. And honestly, even if you look on demand, even just if you have cable, you can see movies that are in theaters a couple of weeks or even like a month or so afterward, and spend like $6. That business is going the way of the dodo. So these are all kind of game changer technologies. With regard to Amazon, let's talk trading for a minute. This is how I like to think also. Like when people ask me how I think about the market, I break it into a few things. Of course, the technicals. That's kind of my big thing. I'm a big deal technician on here. Fundamentals, like I said, are the trends going in the way of the company or against it. And then macro, the backdrop of the macro is sort of like, when I talk about macro, I think I talk about it a little bit differently. I think of it a lot as credit. Which way are the world credit? How is the country doing? How is the credit market doing? Are things tightening or expanding? And they're expanding. We just had a consumer credit and a confidence number a couple days ago that were, I think, pretty stellar. So that's my view. So let's get into the technicals on Amazon. I'll go into this in more detail on Sunday, but it was oddly the same setup as Apple. As it was first of all, you had a look below and fail of the 50 MA, and then that took you up. But that wasn't really what triggered this whole thing. The trigger was on 321. You had a look above range and fell. It was an outside reversal day, and I had been talking about the stock going higher, and I had played it long. I wound up stopping out that day when the stock was close to flat, and it wound up being down really big on the day, and it wound up being a pretty. I felt kind of relieved, and I said if we went to from there, I thought we would see the range low, which we subsequently did, and we tested it a couple of times. The next day wound up being a rally day, but a few days after, we had a look below and fail. And once you have a look below range and fail, and I have military, there's some big military copters going by. I'm sure you could hear the engines. They're the Ospreys, too. Those might actually be Trump's Ospreys, the president's. Let's see. You had the look below, and then once you took out that day's high, the 321 day high, it was like gangbusters off to the races. And you came up from the bottom of the range, and now it went up even still further. And today was really just a consolidation day inside of range. I live in New York City. Someone asked where I live. Anyway, so that's the story with that. With regard to where Amazon may top out now, I did a measured move that would roughly be about 884, 885. If you go up to the top of the channel it's been in, that's around 891. But that would be if it were like to happen tomorrow. It may just, back and fill a little bit, work off some of this kind of move, because keep in mind now we've come up from the range low through the range high. I think the stock looks pretty bullish though. It had been consolidating for a while. I thought if we were to look below the range and go, we could have seen 800 again, but that has not been the case, and it held, and I wound up getting back into the trade long, and I still have some of that. I still have that trade on. If you're a really short-term type of trader, you don't want to see the midpoint of that kind of big breakout bar get lost, and you for sure don't want to see it now back below 862.80. Anything back below there to me would be that this was now a look above and fail. That doesn't seem to be the case. I do think, though, that a little bit of this is going to depend on next week, because we have window dressing. It used to be years ago that you couldn't mark it up on the last day of the quarter, but it's sort of anything goes in a place like this these days. Oddly, this was the same setup in Apple I had talked about. This was on 321. You had that big move up. The next day, the low held, basically, and then on 327, you had the look below range, below the 20 MA in particular, and fail. And then the next day was this really big up bar that triggered that high, ran the stops, and really, I think, was quite bullish. The last 2 days have just been consolidation and digestion of that move, high and tight, in that range above that bar's high of days. So it's still, Apple to me still looks good. I think that there is a play here now. If you want to be a quick for short, you could do below the 2-day low, or if you want to add to the long or play long here, you can do it above the 2-day high for a right. Those are good right or right out setups in my view. Let's get a little more macro again for a moment. IBB, I want to talk. Actually, let's do TLT first, and then we'll do the dollar, and then we'll do those. TLT is pulling back a little bit. It filled the gap. It was also a look below range and fail that on 313. Now we came back up to the top of the range, the recent range, and now it's pulling back. So it's still above the 100 MA and the 10-day MA, and you have like the 50 and 20 kind of below it. I can't tell you that this isn't going to pull back more. It may pull back mid-range. That's sort of where I would be thinking. But I do think if this gets like sort of like into that 50-20 MA confluence down in the 119s, it's worth a shot. As long as my opinion that this stays over 119.21, really, I'll give you a hint of what that was if anyone wants to know. Bueller. That was the 1214 Fed day high. As long as it kind of stays above that on pullbacks, I'm okay with the with trying long on pullbacks here. It looks like it's just going to be consolidating in this band, and we're going to really kind of have to wait for it to break in either direction for follow-on type of trade. As of now, it's just consolidating. The reason for that, everyone says, oh, rates are going up. It's because things may be taking a little bit longer in Washington, and things aren't as great around the world. You have a lot of uncertainty with the Brexit and potentially the French elections and so on and so forth, and what they're going to do with the banking system. I think there's also some consternation about if the Fed, how many times the Fed are going to hike. I think they've got maybe 1 or 2 more in the tank this year. I don't think they're doing 3 more. I think it's 1 or 2, particularly if healthcare and tax reform take longer than expected. That agenda could be pushed out till 2018. I do believe it all happens. I just can't tell you that it's going to happen as lickety-split as the market's going to love. Let's go into what got us here, the IYT. So this was also now, I want to say a look below and fail, but it spent a few days there. Like on 321, it was a look below and fail. Then the next day it was up. The next day it was kind of still around there. Then the next 2 days was down. Now it's up. I had drawn in my weekend review that this could be forming a head and shoulders pattern, and we could be in the process here. We've now broken the downtrend, by the way, to the last couple days. It's stalled just below the 100 MA here. Maybe this is all it's got. I don't know. But I wouldn't be surprised to see this thing at least rally up to the 50 MA. And if it is going to be a Head and Shoulders, it's going to take a little time to build out. It's just not going to be like a pinprick and then down. It's going to kind of have to round out, either to an equal or lower high than the left shoulder. I will show that in the weekend review video, but now we are sort of in the rally phase of what could be setting up for that Head and Shoulders. The other kind of girl that we came in with was Copper, which is consolidating here, potentially also forming a bit of a wedge pattern. I don't want to say it's not really a clean look for a Head and Shoulders, because the last low here is so much higher than the neckline. And we seem to be breaking out of the wedge to the upside here. It's not with a lot of conviction. Today it was actually, we closed a little bit weak back into the prior day's range, but we are kind of above the downtrend. So, and still closed above the 50. So I think you could use today's range as a guide. Above the high, I think, is a long. Below the low could be a tester for a short, and that's the copper. While we're talking metals, let's talk gold and silver. I had meant to discuss them in the weekend review, but I don't know. I don't want to say distracted, but I was getting low on time. It has a basic double top here. It's not a confirmed one, but and we're kind of just consolidating below the downtrend line. So I'll say this: if you want to be short gold, you can use it with a stop above these two double highs. If you're looking for a long entry in gold, I would be looking to buy it over the 2 times high, and that would be a move also over the 200 MA. I think if you took that out, and that would take out one of the downtrends here, there could be a move really to like the recent highs in really where the breakdown took place in the 124s. So you really need, if you're going to try short, you could do it against like 120.40, or you could set that as your trigger for an entry. I think above that would be go time. I've been more bullish on silver. That broke the downtrend line and is above the 200 MA now for 4 closes, even though today was a bit of a look above range that came back in. Even if silver pulls back a little, I've been selling puts on dips in silver. I think silver is destined for more. If you want to be quick, you could, or if you're looking to add, you could do it over 1733, or if you want to try short, you could do it below 1705. In general, 17 is a big strike that kind of needs to hold for the time being. Let me cross off a few of these things that we've talked about so that I don't repeat myself. We talked about the IYT. IBB, the biotech, that's been looking a little bit better lately. It's kind of been in consolidation. Anything above like 289.71 to me, it seems all right. Like the 50 MA had the kind of the look below and fail. This now today stalled at the 20 MA. This is just a lot of chop. I think this is sort of a I think it's trying to base to move at some point higher, but it's kind of taking a while. So what I like to do is we got up to the top of the range. At some point, this 301s won't hold it as much as it has, and once that clears, it'll go. But it seems to be like caught between like 301s and like this 263-ish area. So I kind of like buying the range low and selling the range high until that stops working. Now we're kind of just waiting in the range. So I'd either like to see this lower to buy, or now over like 303.74, 303.65. Those were like the two double tops, and this will be like kind of like the third. This would now be the fourth top. Sometimes it takes like 4 or 5 times to go, but it seems to me like this biotech is firming up. I don't know when it's going to go, but when it does, that's where my buy stop would be. As of now, if it were to continue lower, I'd probably be a buyer closer to the 200 MA, particularly if the 50 MA were to not hold again. I think the 200 MA would probably be in play, and the 200 MA and the 100 MA have a kind of a confluence. That area to me would be an interesting right or right out spot. So I either want to buy it on momentum over those recent highs or lower closer to the 200 MA. Speaking of Netflix, not to bump into back and forth too much. It's over the 143.46, which was the gap high of day. It's just been drifting higher. I think that this could also be, it was one of the big winners, so it's getting some window dressing. As long as the 50 MA holds on dips, it's a buy. So like I'm down to buy it on the 50 MA until that doesn't work anymore. So you'd really need to see this thing start to close below the 50 MA for that to be not be a buy. We do have earnings coming up in the next couple of days. The ideal scenario for me with this would be for this to have some type of blow-off gap up and take us to the 1.618 Fibonacci extension. I have two measured moves potential to 164.16, 168.14, and the 1.618 is 166.22. So the ideal scenario would be for this to like have some kind of blow-off retail gap up, exhaustion gap, to maybe put on to book profits and or to try shorting. That's kind of my take on this. Until you really lose the 50, the path of least resistance is higher. If this does though keep running into the print, like the next few days, it's now up 1, 2, 3, 4, 5. What is it? 5 days? 1, 2, 3. No, 4 days. You might want to book a little bit. But for me, I would not be interested in shorting this stock until it either gets my full price extension or starts losing the 50-day moving average. Then, to me, that would be the story with Netflix. Boeing was one I played to the short side pretty well, actually. It was a little bit of a top-picking call on my part. I'm not usually in the business of picking tops, but when I do, I do it right. I thought this might see the 50 MA. It has yet to see it. It is still in a downtrend, making lower highs and lower lows. And today was a look above and fail on the trend line. So until the trend line breaks, keep it like this. Until you get back up over the 20 MA, which is just above us, it's a little iffy. I would be, if you're interested in a long in this, I think you could buy stop at over 180 quarter. That was kind of like the big move down that took you out of the back. Like we had been bouncing on the backside of the old up channel, and that's what brought you below it, and now we're kind of just challenging it again. Either over 180.25, I'd be probably a long because you'd have broken the pattern. That would now be making higher highs. But yeah, I'm a little iffy with this. This has moved a hell of a lot. If the transports are going to have that head and shoulders pattern, it's a little iffy to me. I'll tell you where I would be an interested buyer in Boeing. If this were to keep coming down into their earnings, like if it was just melting down into earnings, I think that there could be like kind of a last throw up, because you don't tend to have stocks top like this that have moved all the way up. Everyone thinks, oh, it just moves all the way up and then it's just kaboom. What you need to have happen, and we're still, in my view, in one leg lower here. This is all one leg coming down. You need to see that downtrend break, the stock to rally then to a lower high, and then take out the prior swing low, and then the stock is topped. So I view this as all as one leg move lower. I don't believe that this is going to be the leg that just like ends it all. And I do think that there will have to be a rally at the very least to a lower high before this thing were to really explode. So keep that in mind if you're playing short, that it's still kind of struggling. You have a downsloping 20 MA now, and we are starting to make lower lows and lower highs. But I do think at some point that this is going to have some type of a rally attempt that either is going to succeed to a new high or going to fail at a lower high. And that, to me, would get more interested in Boeing. If this, in the meantime, were to melt down to, like, let's say, to me, the 50 MA is too close to the last low at this point, I would be interested, and I don't think that this is going to happen so easily, but if there were to be, like, a larger correction, I'd put a buy order in down near the 200 MA. I think that near term, as long as as long as it's above the 50 MA, I'm really not that interested in playing this thing super short. If you were to break the 50 MA, then I'd be playing short to the 100 MA, and you could probably reverse there for a short-term bounce. So that's my story with Boeing. Someone just typed something, I didn't see what it was. I didn't know how relevant it was. Tesla, I don't know how many times I can say this. As long as the stock is above 265, I think it's going to 306. If it gets back below 265, then it'd be a little bit iffy. So the first stop would be 287.39. That's the recent all-time high. And then a measured move would take you to 306.48, actually. If you want to go even to channel high, now you're talking about 319. They have earnings coming up. If this keeps gunning itself into earnings, I would be a little bit cautious. Ideally, if you're long, you'd want to see the move happen before the number. It may take the number to get it there. We'll reevaluate when that does set up as far as an earnings play goes. But the reference all-time high is 291.42. It seems like we're going to get there. Like I said, I think it's going to 306.48 as long as 265 holds. Below 265 at this point, to me, would say that there's maybe something going wrong in the stock. Exxon. We'll end on Exxon because I have to get out of here. With regard to Exxon, the high was like in last year, 12-13. This was on Rex Tillerson being appointed Secretary of State, and I think there was some type of something happened that they got something. The stock has been a pretty solid move lower, with a couple of minor little bounces, but we did get into the 50% fib, a little bit of a look below, and now today, for the first time since the 50 MA broke down on 1.9, we had a downtrend break and a close above the 50 MA from a higher low. I added to Exxon today on that break of the 50 MA and the trend line break. I would take that off and say that it was a false move if we were to start closing now back below the 50 MA. Any pullback to the 50 MA, I'm still okay. Moves below, I would not be okay. I'll start trimming some of those other short puts up closer to the 100 MA, which is close to 85, like close to 86. I would start peeling off the trade. But as long as 83s hold, that could be in play. Anyhow, I think we're going to try and keep it short here. I'm going to end on the major market indices quickly, and then that is when we're going to cut it. So this is the end here, the last three indices. So stick with me, we're almost done. All right, so SPY had a look below the 50 MA and fail on 327. That means we'll probably see the range high, which would take us up to close to 238s. We're above the 10-day MA, but we're just below the 20 MA. So what would I say? If you're looking for short, below 234.73 to me would be an entry point. And I would add to that if we were to lose the 50 MA, because then I think we'd see the 100 MA quickly down near the breakouts in the 228s and 229s. If this gets up above and accepts 237.61, that was the big downdraft bar. If we can get above that and hold above it, I don't think that it's going to be long until we see new all-time highs. So that to me would be the key, to see if we can get above and hold 237.61 for add-on longs. And if we lose the 50 MA, I think that the play is short to the 100 MA. That's SPY. IWM is still in a pattern of making lower highs and lower lows. And today actually stopped at the downtrend line, the backside of the old up channel and the downtrend line. So if you're looking for a short in IWM, you could try it against these these 137s for right or right out. I can't tell you that I think that this play is going to work out or not, but you know what the stop is. The stop would be above 138.60. So if you're dying to short IWM on a move a little higher, like if there's like a small little bit more up, you can do it there, or on a loss of the 50 MA, which is just below. So if you kind of want to try it, you can try it with a stop above 138.60. Or for me, I'd probably be more interested in an entry on a breakdown below the 50 MA. That to me would be a little bit more interested than trying to pick tops, but teach their own. Everyone has their own different style. Here is the superstar QQQ, new all-time high today. I don't think a lot of people realize that, but we did make a new all-time high in the Qs, albeit just a little bit. So that could be foretelling where IWM and SPY may be going. We'll have to see. It wasn't by all that much, just a little bit. I've said I thought we were going to see 132.71. That was the 1.618 fib, and we are like right there. So I think with this one, if you start losing the 10 and 20 MA confluence, maybe that would be a place to stop out or to be short. 131.14 to me is an important level as well. So like that area, you really need to see that hold. Anything below there could be starting to get a little bit iffy. This never had a 50 MA touch, so Qs have been showing a lot of relative strength. Interesting, though, that Apple today didn't make a new high with the Qs. I don't know if that's foretelling anything because Apple is basically at an all-time high. It kind of led the Qs, and it's just like in 2 days of consolidation after a massive move. I'm not making anything of that just yet. What you'd really want to be looking for here would be like, for example, if Qs were to be up big, Apple were either flat or down, not these little dribs up, then I would say that we're getting close to the end of that move. I honestly don't know that we're going to have resolution on any of this until after the end of the quarter and next week. Next week early, we're either going to see, I'll say this, the first couple of days we may see some buy-in, right? Like I want to look where the money flows are. Are people putting money into the market or are they pulling them out? April tends to be a decent month in the market. If it's not up early, we may get a bit of a pullback. I'm not kind of convinced yet that we're fully out of the woods on SPY, but I will say this. Like I said, we've had gap down days that have been really mild. We had one bearish day, and one bearish day doesn't make a trend. And keep in mind, we're still like spitting distance from the old all-time highs. There's really not that big of a kind of a chasm here between where we are now and then. And I watch the TV and the media, and I'm going to make a quick comment about them. First of all, we are, by the way, we're above the secondary downtrend line as of 2 days ago. So that is sort of snapped. We're still in a bit of a minor down channel. If SPY were to mosey on up to the top of the down channel, like I said, that's 238s, the gap fill. That would be, if you want to try short, right up there would be very interesting to me for right or right out. I may even try that myself. But if it keeps going, it will keep going. Someone asked me this week also, what do I think? Where do I think the market's going to go? And I know this is going to sound cute, and I know this is going to sound like I don't know if it's going to be flip. And I said it at the time. I said if it's not down, it'll be up, because that would mean to me if it's not down, meaning the lock-in. If it's just even flat, it will go up because there'll be the window dressing. So we've had that for the most part this week. We may get a little bit more of it tomorrow. I think after early next week, even maybe if next week early is down, I think we're going to see a pullback. But if we have a couple of days up toward the end of the week, next week, then the week after, that's maybe when we would have an opportunity for a move for a bit of a pullback. So that's kind of what I'm keeping my eye on. I want to see what the money flows are like. Today, a lot of people were complaining that the market wasn't. Listen, the market had moved up a lot. Today was mostly an indice move, and then most of the action I saw today, I'm just looking across my watch list. Everything was just kind of up a little bit. There were a bunch of stuff that were down. I know some people were saying they thought that the indices were masking weakness. It really was not the case. I think the insurers were doing well. Let me just pull up MetLife quickly. I'm curious to see. Yeah, that was up nicely. It stopped right at the 50 MA though. Travelers, that's another one I want to look at. And then I think what was weak, and I think this is what everyone's like flipping out about, is that you're not, and then JPM was okay. That actually is now at the backside of the old uptrend. So JPM back over the 50 MA, pretty impressive. I think people have been freaking out about the financials being a little bit softer lately. They ran ginormous. Give it a little time. A little pullback is not a problem. It doesn't necessarily mean that just because they're pulling back a little, that doesn't mean that they're not going higher. These stocks moved so far so fast. A pullback to retest their breakout points to me wouldn't even be bad. I don't see like JP Morgan getting like crazy bearish as long as it maintains now, again, back up over 88.17. If you were to lose that area, the 88.17, I think you could play short down to 83s, which is the bottom end of the kind of the consolidation range. I could make the argument if we got down there that we have a bit of a rounded top forming. Maybe this keeps... I'm going to show this a little bit more in the weekend review video. Everyone wants to know what the bear scenario would be. I will show you the bear scenario. I'll make you people so scared you won't want to come out from behind your desks. I'll show you what the bear scenario would look like. And then I'll show you what I think I'm seeing, which is nothing just yet. But I'll show you what would need to happen for me to get really bearish, particularly in the markets. I'll do it on all the major market indices, and then I'll do it in some of these big ETFs like with XLF. JPM in particular, I want to just say this. It's been in a big channel, and it's been riding the channel. A move even down to channel low would take you down to like close to the gap fill, believe it or not, 78.92. If it takes its time, which it seems, it would be roughly around 80, which is kind of like the breakout. The breakout of that range was 80.44. I think that area to me would be an area to buy. I actually did on the dip sell some out of the money puts that have been working with the conscious effort that I was looking to add to it down in the high to low 70s to make the position kind of whole for that play. At some point, I think JPM is likely to see 100, but I don't know that we're not going to get a pullback first. And we will review that. I think that I'm just now pounding sand because I can't show you the charts, and I really need that level of visualization to take this conversation any further. Anyway, that's my story. I'm sticking to it. If you missed this or want to watch it again, it will be replayed after this thing finishes uploading or whatever they do over there at YouTube. Anyway, have a great weekend. I will be back with you with my charts. I'll bring all my shoes and glasses on Sunday. Cheers.